again to our friends and partners at Phillip for hosting this webinar. We've enjoyed I guess we've done 3 or 4 of these now, and we've enjoyed them, and we always have good results in working with Phillip. So we appreciate that. And thanks everybody for taking some time out to join us. I think we probably have more of a captive audience than we usually do. Seems to be a lot of people sheltering at home these days. But we'll try and make this, informative and give you an idea of what we're trying to do here at ICE Futures Singapore. I think just as an overview of the presentation, what we want to accomplish here in the first part of it is to give you a bit of a view of how we've set up ICE Futures Singapore and how Bakkt interacts with ICE. And what makes our product a little bit different than some of the more typical crypto offerings in the market. In fact, when you look at us front to back, we're really completely different in many ways. But one of the things, I guess, before we get started, well, anyway, let's just dive in, and we can talk a little bit in more detail about this as we go forward. We usually gloss over this slide when we do these presentations. The Intercontinental Exchange builds, operates, and transforms global markets through information technology and expertise. And it sounds like kind of a lofty, ideal and a mission statement, and it really is in a way. But it's really applicable when we're talking about the topic that we're talking about tonight. What makes our business model a little bit different than some of the other exchanges is that we don't just create new contracts and put them into the same environment over and over again, just seeing what product will work within a given exchange infrastructure. We've actually done a couple of things in the last 2 years to change the way people trade in creating new trading environments that solve problems for customers. And that's really the key to what we do, solving problems for customers. One example, we won't spend any time on it tonight, but if you have a chance, look it up. It's called ETF Hub, and we launched that late last year. And it was a way for the big providers of ETFs, such as the BlackRocks of the world, who BlackRock actually partnered with us on this initiative, and a way for them to do deconstruction and reconstitution trades much more quickly and efficiently. And now it's being adopted by the broader market, and it's actually changing the way that ETFs, in particular fixed income ETFs, are formed and brought to the market. So that's a way of looking at solving a problem that customers had by streamlining and designing a new trading environment. And that's exactly what Bakkt is as well. Bakkt, I read you just, of course, what you can see on the screen here, has a mission statement of expanding access to the global economy by building trust in and unlocking the value of digital assets. What does that mean? I think it's easiest to start when we talk about Bakkt by saying what it doesn't mean. Bakkt is not a crypto exchange. A lot of people have that sort of idea when they come into it, oh, that it's another crypto exchange that you can go and trade tokens at. It's not that at all, really. It's also, there is no such thing, and I'll clear this misconception up right away, as Bakkt Bitcoin. Bakkt is an environment that warehouses Bitcoin and other digital assets. But there is no special coin that is called Bakkt Bitcoin. BTC is what is warehoused there, which is the common sign for Bitcoin. But we look at the world of digital assets in a little bit broader way. It's anything that holds value and is intangible. It encompasses digital rewards such as hotel loyalty points, in-game virtual assets, merchant stored values, gift cards, and of course cryptocurrencies. And of course, they can be stored, traded, transferred, and used as a form of payment. So we're really looking at the broader world of digital assets when we're talking about Bakkt. Now, we're not going to spend much time on that tonight. We're really only going to talk about the mechanism for trading Bitcoin via the ICE in the United States and, of course, via ICE Singapore. And that's really what the business end of this presentation is about, how you can participate in the risk of Bitcoin. Another slide just to tell you a little bit more about Bakkt. It has 3 different elements to its model. The one that we're going to be working on tonight is the trading side, which is, of course, the world in which we live at ICE. But Bakkt also is an environment for converting and aggregating your digital assets, including cryptocurrencies, and also an exciting development that's going to be launched later this year as a way of making payments using digital assets, including cryptocurrencies. We're really excited about that. And I would invite anybody who wants to do a deeper dive on the Bakkt concept to Google, just go to your Google and say Bakkt, B-A-K-K-T, and Medium. And we have a blog that's on Medium. That's one of our primary ways of sort of communicating with the world about developments on Bakkt. And it's really worth reading a few of the snippets there. They're really only 5 to 10 minutes long. It's not a big academic exercise, and it's really worth your time to have a look. When we founded Bakkt, there were two guys that were instrumental in the early days of helping bring it together. I mean, the first person to mention is Kelly Loeffler, who has been with ICE for her entire career until just recently when she became Senator Kelly Loeffler. But she brought in two guys, Mike Blandina, who came up in the technology side. He's got an engineering background, and he'd spent time at PayPal and at Google, and really more focused on the payments aspect. And then, of course, Adam White, who is our president. Mike is the CEO, and Adam White is the president. And Adam, we hired from Coinbase, where we'd made an early investment a few years ago. And together, they really sort of led Bakkt out and was launched in 2018 with a group of corporate investors that included Microsoft M12, Boston Consulting Group, who worked with us on the project, several of the large crypto funds, and some big name individual investors that came together. You can again Google who invested in it. You'll be impressed by the list. But we really came out with this idea of creating something that was regulated end to end. And that's the most important thing to take away from this. You'll hear me talk about that several times in the next few minutes, that we're regulated front to back, whether it is on the trading side, in the custody side, or on the payments side. We're regulated throughout. And we are the only environment that can say that we have regulation from front to back. We compete a little bit against some of the other established players. These are crypto exchanges, unlike Bakkt, but they do compete in this space. You see Kraken and Bitstamp and Coinbase and so on, and the wallets, and the big custody warehouses like the State Streets, Deutsche, BNY, and so on. We're all in the same sort of arena. They are in tangent areas, but ICE and Bakkt together are the only one that has their arms around all three areas, cleanly and regulated all the way through. What we're really here to talk about tonight is ICE Singapore and how we are participating in this sort of revolution. ICE Singapore launched in 2015, and we launched again to solve a problem. We had a group of investors who were participants on the exchange in our other exchanges, ICE US and ICE Europe primarily, that wanted to see a regional exchange that sort of addressed the needs of the Asian investor, and primarily looking at retail and at small market or small funds and so on that are so important to the Asian marketplace. So we built ICE Singapore to sort of fill that need. We have no fees for our market data. We're primarily using cash settled contracts, normally mini contracts that are derived from our larger exchanges. Low exchange fees, so we can offer the same sort of notional value at a lower exchange fee to our contracts and other exchanges, and with the highest quality infrastructure in the business. The same infrastructure that is available on the larger exchanges in the United States and Europe. And most of all, and it's important, I think, in Asia Pacific and primarily in Singapore, we're regulated by the MAS. We're an approved clearinghouse, ICE Clear Singapore, and the exchange, ICE Futures Singapore, are both regulated under the auspices of the MAS. So let's get to it. What makes Bakkt Bitcoin contracts different from trading in Bitcoin on one of the smaller exchanges or one of the unregulated exchanges? Well, first of all, we're using futures contracts, and I think that has the idea here is that they're not just futures on Bitcoin, they're futures on a specific product. So when we designed the contract for launch in the United States, we had the idea that we wanted to launch to have it rather physically settled, and it would settle with 1 Bitcoin. And we did that for a reason. ICE is very much in the benchmark business. And so we wanted to create a benchmark from which we could derive other products. And also an industry benchmark. You'll see that, of course, our oil contracts and other energy products are benchmark contracts. The Brent, for instance, is the benchmark price for oil globally. You'll also see we own the LBMA Gold Fix and Silver Fix in London. We also own LIBOR, which is on its way out, but we will have a lot to say about the SOFR fix as well. So we have dozens of indices and so on that we have a grasp on as part of our business model. So we created the contract in the United States to have a benchmark price for Bitcoin. When that Bitcoin is delivered, it's one and only one Bitcoin. It is not an index. It is not a derived price itself. It is the price of a single Bitcoin. So we wanted to do in Singapore what we'd been doing all along with the other contracts, and that's to take that settlement price that we have in New York and link it to a contract in Singapore that is cash settled. So investors can use this contract without any risk of delivery. One of the roles of an exchange is to isolate the risks that customers want to take, in this case, the price risk in BTC, but without an operational risk they don't want. For instance, the delivery risk or the credit risk. It's the exchange's job to stand in front of that. And it's traded via a normal futures account. So you can partner with your broker at Phillips and trade it through your normal futures account. You don't need to set up another account at a crypto exchange, and you don't need to give up the protections that you have using a regulated futures account onshore in Singapore in order to get involved in BTC risk. So that's really important as well when you look at the money movement, where a lot of people have experienced unexpected costs and risks in transferring money from a Bitcoin account at an unregulated exchange. If you're using your broker at Phillip, you'll transfer it in a normal wire transfer at T+1, just like any other wire transfer that you make to or from your broker. There won't be a large variable charge. There won't be an unexpected delay. You won't have limits on how much you can liquidate in a day. It's a normal futures account. Of course, and you'll hear this is the second of probably 20 times I'll mention this, we have the MAS regulatory oversight. They monitor the exchange, the clearinghouse, and the brokers. Now, that's important to understand in that you see a lot of other unregulated exchanges where one of their or more of the aspects of their business might be regulated, and under different jurisdictions, for instance, their ability to handle cash will be regulated. But the trading rules and the supervision and the risk mitigation that the MAS offers in a futures environment is much, much greater. This is also true in the United States, where, of course, we're regulated by the CFTC. Obviously, and I mentioned it before, but operational and credit risk is monitored at all times. And we don't have to satisfy just our standards, which are very high internally, but we have to satisfy the standards of the regulator on an ongoing basis. And again, we don't know of other exchanges that are having to do this with regards to their trading of the product. And we'll talk a little bit more about it in just a second, but we have a superior security and technology infrastructure. I think there's been a lot of news around the trading disruptions at some of our competitor exchanges in the last couple of weeks. And knock wood, all exchanges have that risk. We are not exempt from it, but we have the experience and the expertise and the deepest technology stack in the industry in order to ensure the smooth flow of transactions, even under great market stress. We handle hundreds and hundreds of thousands of transactions per second across our several exchanges. And we do so not always problem-free, but much, much more smoothly than anybody else in the industry. We have a good reputation for that, and we aim to keep it. So we set ICE Singapore up with the same technology infrastructure and security standards of our other exchanges. I wanted to talk a little bit about one of those big differences in terms of how we're managed when we look at us versus a traditional crypto exchange. You can see there are 3 layers to this, and we have obviously the MAS approval of the clearinghouse, the MAS regulation of the brokers, and the client protections that are afforded under the SFA to to participants in this contract. We're a regulated and trusted central clearing participant. We have very strict membership criteria, and our client money is segregated, which is a feature that you will probably not find in a lot of the crypto exchanges, particularly the offshore crypto exchanges. I mentioned the technology stack a few minutes ago, and it is really second to none. I mean, we have obviously we have co-location available to that's offered at a fair market price. It's not free, and we don't have the free APIs that some of the other crypto exchanges might offer, but you get what you pay for. We have a very solid infrastructure, unmatched in terms of our ability to get orders from point A to point B. And for people who are in arbitrage, who are looking at arbitraging our ICE US contract to the ICE Singapore contract, the servers are co-located in the same data center in Cermak in Chicago. So what that means is that if you are in that part of the industry where you're looking at doing high frequency trading or low latency trading, you can get from the SGX data center to our Cermak data center in as low as 103 milliseconds. And operating in arbitrage between us and the mercantile exchange, it's 0.3 milliseconds between Cermak and Aurora. Now, these are not our fastest speeds. We offer ultra low latency to certain people. If you're interested in that, please give us a buzz after the meeting and let us know. We can introduce you to the people in our connectivity and feeds group that can introduce you to our ultra low latency solutions. But these are pretty fast, and we put them on there because we know that this is what's available to everybody who wants to work in co-location with us. Again, our security is second to none. We have people round the clock monitoring it. We have on staff larger data security team than most of the crypto exchanges have in their entire personnel list. So if we have 60 people around the world doing this, then know that there's a lot of crypto exchanges that don't even have 60 guys in their entire staff. So 24/7, we're monitoring this from Atlanta, our headquarters there, and from New York and from Europe, as well as having people on site in Singapore to monitor the security 24/7. We have all kinds of ISVs available, and our most common solutions are listed here. I've highlighted Phillip Nova because we're going to talk a little bit about that platform later tonight. It's a terrific platform with a PATS backbone. We have our own in-house solution, WebIce, and of course, Trading Technologies, TT Screens, and CQG are also available through your broker at Phillip. Just a quick look at the contract specs before we close out here. We have one Bakkt Bitcoin per contract, up to 12 consecutive calendar months. Our tick size is $2.50. Which is wider than, of course, a cash Bitcoin market, but actually narrower than our competing contract at the mercantile exchange. And you can do block trades down to one penny if you're doing block size, and block size is 10 lots minimum. So 10 coins minimum for a block trade. Some of the more common ticker symbols are listed here on the right, and I'm sure that Ethan will tell you what the ticker symbol is on your Phillip Nova when he gets up to present. Just a quick side-by-side comparison for people who are interested in how we look versus the ICE US contract and versus the CME Bitcoin futures contract. As I mentioned earlier, we're 1 Bitcoin per contract, $2.50 per tick, and we settle to the price of the physically delivered Bitcoin at the Bakkt warehouse. Technically, the ICE Singapore contract settles against the settlement price of the ICE US contract, but that is derived directly from the price of 1 delivered Bitcoin. Now, if you look at the CME contract, it's a bigger contract, five coins per contract, a little bit wider tick, $5 per tick. They have a good listing of contracts, 6 consecutive months, but with 2 December contracts. The key difference, I think, between our contracts and the CME is that they're using an index. The index of 5 unregulated exchanges where they come in to determine the price of the contract. And there are, as anybody can tell you who's watched the history of the markets, there are always nuanced differences between the use of an index in a contract and the use of a true physically delivered contract. In our DNA, we have physical delivery, of course, of everything from cotton to cocoa to coffee to sugar to crude oil and so on, where we really have it down to an art. And we call the delivery facility at Bakkt a warehouse, just like we would call it a cotton warehouse a warehouse. This is how we do business, and we want people to understand that that makes us different and unique in the world of trading futures on Bitcoin. Little thing on the cost of trading, and as anybody knows, the primary cost of trading is the spread, the bid offer spread between the best bid and the best offer in any market. And we compare very favorably. The snapshot was taken on the 18th of March, which was actually a delivery day for our contract. And you could see that the spreads were very tight throughout this particular section of trading. And I really didn't choose this for any reason. I just screen grabbed it and put it down onto the slide. I didn't wait for it to be perfect or anything like that, but this is really what it looks like throughout the day in Asia Pacific. So you'll see that the blue line is ICE US. Sorry, the blue line is ICE US. The red line is the CME, and the black line is ICE Singapore. And you can see that the spreads in bid offer are very, very tight, very close throughout the day. And if you look down at the smaller cutout, you can see that second month was really more active at that particular point in time because we were into a delivery on the front month, and you could see that the spreads again were very competitive. The CME contract was at $10 bid offer. The ICE US was at $7.50. In ICE Singapore, the trading action had slipped into the second month, and that was at $5. So it's very competitive throughout the Asian trading day, and it remains competitive overnight. We have decent bid offer right on through London and into the US. How are we doing in terms of volumes? Not bad. I mean, one of the big differences between looking at us and looking at some of the cash exchanges is that a lot of that volume is, I think, as everybody knows, is artificially created. We're not allowed to make markets in our own contract. That's not within the role of a regulated exchange in any of the jurisdictions that I've worked in, whether it's the United States or Europe or in Asia Pacific and in Singapore, where some of the cash Bitcoin exchanges operate a little bit more like FX brokers, in that they're always in there trading against orders, trading against each other to generate volume, to draw business into their exchange. So you can look at what we do as true volume. And we're doing around 3,000 coins a day, combined ICE US and ICE Singapore. And you can see that the spread between ICE Singapore and ICE US in terms of business is roughly 60-40, 60% ICE US and 40% ICE Singapore. And that varies, but over the course of a month, it's about 60-40. And that, folks, is about all I've got. I hope we have some questions, and we can go back over anything you wish at the end of the presentation, or I can go back and talk to you offline privately. Just feel free to give us a contact through your broker at Phillips, and we're happy to chat. Thanks very much.
Thank you so much, Vincent, for the overview. Next up will be our speaker from Tradable Patterns, which he is none other than Darren Chu. He's going to be walking us through the crypto market trends as well as strategies for trading the Bakkt Bitcoin cash settled futures. And Darren, if you're ready, I'm going to give you the reins as presenter.
Thanks, Trey. How's everyone doing tonight or today, wherever you guys are based? I would just like to thank both Phillip Futures and ICE for having me share a few ideas tonight, today. Thank you all for taking the time to join us. Okay, so let me just maximize my slides here and make sure this is displaying properly. Okay. Let me know, guys, if the audio fades or if the visual is not optimized. Okay, so let me just start off here, guys, with Let me just get to this next slide here. Okay, here we go. Okay, so just to give everybody a little bit of background about myself. So as mentioned earlier, I actually come from the exchange space. So following a career with a couple of exchanges, starting off with TMX Group in Toronto, working for the Montreal Exchange. I moved out to Asia, actually, to Singapore in 2010, joined NYSE Life, and was really looking after a variety of cross-asset markets on futures and options business development. The impetus behind creating Tradable Patterns actually perhaps began as far back as 2005, when I was actually taking on a bit of an educational role with CMC Markets in Toronto, where I basically created their education offering. And back in that role, I actually had the pleasure of actually teaching traders, a lot of our clients back then, technical analysis. So fast forward to my, I guess, startup Tradable Patterns in 2014, I basically made an observation throughout the career with the various exchanges that quite a few of the hedge fund clients and prop trading, commodity trading house clients who I used to visit actually, although would apply technical analysis on various levels, I just felt that there was a real opportunity actually, particularly post GFC. You know, after 2008 and after the sort of brokerage industry underwent quite a few changes, I just realized, well, you know, there's still demand for technical analysis, and you can call them trading ideas, and that's really why I started Tradable Patterns. Okay, so let me just go on here to the outline. Okay, so what we're looking at today really is a discussion on how Bitcoin over its history, but particularly in the recent past, has fared versus certain safe haven markets such as gold. You know, for those of you who do follow Bitcoin or crypto in general, you often hear how Bitcoin is seen as digital gold. So it tends to be associated with gold by quite a number of perhaps its younger proponents, a lot of the millennial traders out there, or just hodlers, the more long-term investors. They tend to look at Bitcoin or crypto generally as an alternative to fiat currencies, sort of as a store of value and as a safe haven. So throughout the presentation slides that follow, I'm just going to demonstrate as best as I can sort of how Bitcoin has lived up to that reputation. And we're just going to look at, you know, how its performance is held up. Obviously, many of you have been you know, quite active in a variety of assets over the last little while, and with the last months, well, the month of March's big risk-off sentiment sell-off, we're going to see how Bitcoin has performed, and of course we're going to look at as well how it fares versus other altcoins. So quite oftentimes, quite a few, I guess, crypto traders will compare the market share or the dominance of Bitcoin activity in terms of value traded or volumes traded versus that of altcoins. So there's going to be a bit of a comparison just through charts where I show correlations between the price action of Bitcoin versus that of Ethereum and Repo as well. And then, of course, I suppose the presentation would not be complete if I didn't give a discussion around technical analysis. So that is something I'm going to be focused on, just kind of from a big picture, longer, medium-term view, where I'll overview a few of the commonly followed indicators and give a few opinions just from my perspective of where Bitcoin might be going, particularly with this upcoming halving event, approaching in May. So that's just really around the corner. Okay, so I'm going to start off just by talking about, again, how Bitcoin has fared versus a number of markets, but beginning with risk markets. So risk markets, of course, just refer to any risky asset, and in traditional finance textbooks, or those of you who model for stock prices or any other financial instrument using risk-free interest rates, those of you will those of you who do that kind of modeling will often use a risk-free rate such as the U.S. Treasury yield interest that is implied through the price of the U.S. Treasury. Okay, so we're going to take a look at risk assets like the S&P 500. So particularly just recently in a lot of the financial media covering how Bitcoin has fared in this past month of high volatility in traditional markets. What we have observed a lot in the media is a comparison to broader equity indices like the S&P 500. So let's look here just on the, I'm just going to take this highlighter or the spotlight tool here. Just going to show you how with the lower plot here, what we're looking at is the correlation between Bitcoin's price index. Okay, so if you look up here where I'm hovering, the NYX BT, that would just be the index as compiled by ICE, and that would be for Bitcoin's versus US dollar price performance, and SPX of course would be just the S&P 500 index. Okay, so that would be a spot level index. That's not actually the futures price, just to be clear. But for our purposes of demonstrating this correlation or relationship, you can see the correlation is by no means straightforward. So at some points throughout this history, and this is a 5-year chart plot, you can see that we really alternate. Sometimes we'll go through periods where the correlation is highly positive. So I guess, in a nutshell, there is no straightforward definition of what the relationship is between Bitcoin and a risk asset like a broad U.S. equity index such as S&P 500. This relationship evolves. So in the current sort of market melees, or well, I would say the recent market volatility that we've seen, particularly in the latter part of this correlation line here, just on the far right, you can see that the correlation rose basically between these two. Okay, so what happened was when you look here at the S&P 500, you can see that in the last, well, let's just say from mid-February, but to be precise, February 19th was the peak, was a record high on the S&P 500. So from there to the trough, which is defined by the bottom here, that would have been roughly the 3rd week of March. So about well, not basically about Monday of last week. Okay, would have been where we bottomed out here, at least on this time frame. And so you can see that although we have seen a bit of a bounce back just in the last week on the S&P 500, the correlation has remained positive. Okay, so let me just step back a bit and just explain why the correlation went up in the first place. So during times of extreme market stress, where in this past, well, in the still current month, but in the first 2 weeks of March, we saw the VIX hit record levels. And I'll have a chart on the VIX later, but basically what happened was we had a lot of forced liquidations on a lot of not just individual trader accounts, but more importantly on a lot of institutional fund manager accounts, a lot of hedge funds. So with the extreme market volatility, there were some funds that basically just had to liquidate whatever they had wherever they had the opportunity to do so. And so that obviously would have included accounts of crypto or crypto holdings. And so Bitcoin, along with a lot of what would traditionally be viewed as safe havens, also sold off. So we're just going to jump slide by slide and see how, you know, the other list of markets that I'm going to compare with have fared over this period. Okay, so let me just try to toggle here. Okay, so with the NASDAQ, we really had a very similar observation where the correlation between Bitcoin and the NASDAQ rose leading up to the market panic. And this is what you would expect. And perhaps on this long-term 5-year weekly chart, it's difficult to see how this correlation differs from what we just saw with S&P 500. Obviously, it's important to look at how Bitcoin performs relative to the NASDAQ, in addition to just looking at how it relates to the S&P 500, just because Bitcoin represents technological innovation. The NASDAQ 100, of course, is an index of largely tech companies. So you would expect a slightly different relationship. And so perhaps when you guys have a chance to maybe pull up these charts yourself, which stockcharts.com allows you to produce free of charge, you can actually go into a little more detail and perhaps pull up a more short-term chart, maybe a daily 1-year chart, and you'll be able to see a little more clearly how these correlation lines have evolved in the recent past. Okay, so sorry, I'm just having to get rid of my little spotlight tool every time I toggle to the next slide. Okay, so here we have basically a comparison against safe haven markets, where in this first slide of safe haven markets, we're looking at the VIX. So as mentioned, quite often during times of market stress, where in this past month, of course, we can see how the VIX basically went to a record high. Now, this is just a 5-year weekly chart. If you were to pull up a 10+ year chart of the VIX, you can see things perhaps a little more clearly, but we basically made a record high on the VIX. We exceeded the GFC high in the peak of the VIX just 2 weeks back. Okay, so basically what happened was, you know, as we can see here, the correlation became negative. So what that means is that the safe haven status on Bitcoin didn't really hold. In fact, Bitcoin, like I was just saying with the previous 2 slides, it actually during this past month's market volatility, we actually saw Bitcoin sell off as well. So I guess the question then becomes, I mean, more interestingly for those of you who obviously are still considering either buying Bitcoin or perhaps just trading it, you know, long or short, you want to know, well, going forward, obviously, how is that correlation going to change? Well, as we get to our technical analysis discussion at the sort of back half of my portion of tonight's presentation, I'll overview a few slides that'll give a few hints on market direction. Okay, so on the relationship with gold, basically we have, okay, let me just see here. I think I might have a question here. Okay. Sorry guys, I just thought I had a question coming in. Yeah, so on this plot here, what we're looking at obviously is the most commonly cited market for Bitcoin to be compared against. Again, it's not every Bitcoin believer that necessarily believes that it serves as an alternative to gold, but there's a subset of those who have invested in Bitcoin who obviously view it as such. Given all the monetary easing, all quantitative easing and monetary stimulus that we have seen in this past month, particularly in the last week and a half to 2, with all the sort of G20 central banks, particularly G7 ones, announcing in coordination, a lot of stimulus packages. What the market has feared with respect to the U.S. dollar is that that there could be an inflationary effect where you get devaluation on the U.S. dollar or on the yen or whichever other fiat currency that is associated by or associated with a central bank that has unleashed all this easy money. Okay, so let's look at again how this has translated insofar as price action goes with respect to gold. So in this lower plot, you can see the correlation, but again, the lower of these two lines, of course, would be gold. Gold looks rather tame, actually, if we were just to look at the movement within this price plot of this gold price. But just keep in mind, of course, this chart is a little compressed on the y-axis, and you probably would have already noticed this with other charts, which I've already gone over. But basically, we have a bit of a logarithmic effect here, and the only reason we're looking at this particular display is just so that the price of both Bitcoin and gold can be fitted into the same graph, okay? Because obviously, the price of Bitcoin, it went all the way to about 20,000 here. So anyways, those of you who have pulled up longer-term charts and compare two markets within that one chart will know sort of why we look at logarithmic charts as opposed to just linear based charts at times. Okay, so anyways, just coming back to the relationship, all I'm trying to point out here is that the relationship has been positive for the most part in the recent past, but do note as well that if we go back throughout this 5-year history on this chart, you can see that there are times where actually the relationship is inverse, where it's negative. So perhaps counterintuitively for those of you who are very strongly holding the view that gold and Bitcoin correlate strongly positively. Okay, well, that's not always the case. It's clearly demonstrated by this plot. Okay, so on to the next relation. Here we're looking at how Bitcoin has fared versus the yield on the U.S. Treasury at the 10-year tenor. So the 10-year is perhaps the most widely watched U.S. Treasury, typically held by a lot of fixed income managers. And so what we're looking at here really is again a very inconsistent relationship between the two. So the reason we're looking at a comparison of the yield, and obviously you can plot if you'd like, or if you had access to a charting tool where you can plot the price of the 10-year treasury, you can look at that relationship versus Bitcoin's price as well. Here I decided to look at the yield. Okay, so just keep in mind the TNX here, this $ TNX, that represents the yield on the 10-year. Okay, so what we see here is that in the recent past, in the last month, where volatility has spiked across most markets, so in the sort of so-called price action for the yield on the 10-year treasury, the yield actually, according to this black line, actually has fallen. So let's see with this spotlight what I'm referring to exactly. So here we can see there was an initial kind of pop. You could call that an oversold bounce. What we saw here really was a reaction to all those stimulus announcements from all the governments. So again, there's a fear that interest rates will rise eventually, based on the fear that inflation will set in, and the central banks will have no choice eventually but to defend the value of fiat currencies through hikes in interest rates. And obviously, we're talking about again a 10-year yield here. So there's a bit of a forward-looking type analysis that one could probably make. But basically, what we saw for a very long time was obviously during the initial part of the equity market sell-off, there was a rush to safe havens like the U.S. Treasury, where the yield fell because, of course, the price of the U.S. Treasury rose. And so while the yield was falling, there were even those who predicted even lower yields, but then lo and behold, we eventually had a reflexive bounce, and that bounce, again, as I just explained, it reflects an increasing concern or realization by many in the market that perhaps all that stimulus recently announced last week and the week before may have repercussions down the road. Okay, so on to this next slide here. So what we're seeing here is a correlation table with the dollar yen. And the reason why we're looking at the yen now, obviously I could have, on stock charts, I could have just plotted the relationship between the Bitcoin index and the yen index, but I decided to look specifically at the dollar yen. And the reason being is quite oftentimes when traders want to express a view on the yen, obviously there are other crosses versus the yen, but the dollar yen is just a very, very widely traded pair involving the yen. So let's just look at that for today. What we see, of course, is the correlation is all over the place once again. So in recent times, just leading up to the sort of risk-off market sentiment, we had a rise in the correlation. But again, just given the massive strength of the U.S. dollar, and when I say the U.S. dollar, you can always pull up a U.S. dollar index future chart. The ICE market actually has a U.S. dollar index future that is tradable on ICE US. So basically, the U.S. dollar, it's risen more so relative to the yen. So although the yen is a safe haven, or oftentimes is seen as one, despite the debt to GDP load in Japan, there has been an overwhelming rush into the US dollar. And so you can see that reflected by the correlation, at least versus Bitcoin, going negative in these last, call it, month and a half. And so that's pretty interesting to me. And on this next slide here, you can see as well that for another currency pair often described, or at least often watched by those who monitor safe haven markets, the dollar Swiss franc. Again, very similar kind of correlation relationship. What I'd like to just point out is, of course, once again, the dollar surge, the US dollar surge, has exceeded that of the inflows going into the Swiss franc. And so that has basically colored a bit of the sort of the performance of the correlation between the dollar Swiss franc versus Bitcoin. Okay, but once again, I guess the overwhelming message I'm trying to make for today's session, if nothing else I say today or tonight registers, I think the important thing to remember is that these relationships, these correlations, they are by no means fixed within a positive type relationship where the correlation has a positive value. It really oscillates between positive and negative. And there are all kinds of reasons for that. I mean, one of the main points that obviously you should always keep in mind is, although Bitcoin has that safe haven role at times, but there are also other times where where its price action is driven more independently, where it is described as an uncorrelated asset. And the reason being is Bitcoin, or the blockchain underlying the coin itself, it's impacted by all kinds of other fundamental reasons, and those span from miner efficiencies to I can go on and on about the fundamentals, but there's really no time for that today. But basically, for those of you who trade on fundamentals, or at least who have invested into Bitcoin based on fundamentals, you probably already be very familiar with those ideas. Okay, so now let's just look at how Bitcoin has altcoins, and the top altcoin obviously being ETH or Ethereum. What we're looking at here is how these two coins, Bitcoin and ETH or Ethereum, are largely positively correlated. But interestingly, for me included, and up until I plotted this correlation table, I actually didn't realize that there were times where the correlation was quite deeply negative. Now, this doesn't happen a lot, and again, this is just a 5-year time frame, but you can see that there was a time here in the latter part of 2016, early 2017, where the correlation was almost negative 0.8. So that might not sound significant, but well, it should. Okay, so obviously in more recent times, we've seen we've seen an example of a negative value correlation, but here in this August, September, well, I guess that would be September of last year, we can see that the correlation was just slightly negative. Okay, so keep in mind, obviously, these two coins or their underlying blockchains, they are impacted by a variety of fundamental factors. The miners, basically, they mine differently. I'm not going to get into those details again. I'm not an expert on mining, but let's just say that there are different ways to mine different coins. Some coins actually don't even have to be mined at all. They're pre-mined. Okay, so looking here at Ripple or XRP USD's correlation to Bitcoin USD, basically, again, pretty much what most people would expect, but what I would say is the periods where the relationship or the correlations or the correlation between these two markets was negative is actually greater than with what we saw in the previous slide with Ethereum or ETH. And this might be a little, well, perhaps a little more obvious, for those of you who have held Ripple. Basically, Ripple, of course, acts very differently. Its utility is at least marketed very differently from that of Bitcoin and Ethereum. Again, I don't have time to discuss Ripple on the fundamentals. I actually have a newsletter on crypto once a week where I do write about the fundamentals, where I explain what XRP is actually used for, why it's used, or how it's been adopted. Okay, so that newsletter will probably be helpful for those of you new to some of these altcoins. Okay, and now for the discussion around recognition on the price action of Bitcoin itself. Okay, so technical analysis, of course, is probably pretty familiar for most of you. For those of you who have not traded based on technical analysis, I highly encourage you to do so. I'll be honest, when I first came across technical analysis, and this would have been probably in 1997, I actually didn't believe it. And I was just a student back then. I was still in university, and I actually came across quite a few references to some of these terms which are perhaps apparent to most of you, and which are being annotated on this chart and in the few that follow. Okay, so I didn't believe it, technical analysis at all. It just appeared too subjective. But over time, as I was exposed more and more to it, I would say, particularly after I had a row with CMC markets way back in 2005, where I actually had to teach it, I actually became a believer once I began trading on technical analysis. So let's just look here at what happened recently with Bitcoin. So we've been in a major uptrend for a very long time, and you can see how we were in you can describe this almost as a triangle. Some people might call it an ascending wedge, but let's just call this a triangle. It's not quite symmetrical. It's not a perfectly defined symmetrical triangle, but the bottom line is we had this uptrending support line that was broken in this monthly candle of March. So what we're looking at here, of course, is that we've had a break, which for those who are longer term with their trading decisions would be a very bearish development if one were just to look at that in isolation. So as a simple rule, one could just reflexively say, okay, that's where we sell our longs. And by looking at, of course, the RSI and stochastics down here, you could say, well, this, these two lines appear to be pointing down as well, and the MACD, and just slightly, they're not very steeply negatively sloping, but they are slightly sloping down. And then you could say from the MACD plot here, you could say that, well, it's negatively crossing, and that's quite bearish. Okay, so that's sort of the very basic interpretation of this 5-year monthly chart. Okay, so let's see how our view, or my view, might change if we were to switch that to a weekly candlestick chart of the same time frame. So this is still 5 years, but I guess the difference is when you look at candlesticks that are weekly in nature, meaning each candle is 1 week of price action, the appearance of the RSI, stochastics, and MACD differ quite substantially, I would say, particularly the RSI and the stochastics. And so once again, these are two different time frames as reflected by each candle within this chart and the one we just looked at. But the time frame overall for this chart is 5 years. Okay, but the messaging or the interpretation that one might get just by looking at the way these two lines are quite steeply sloping down is quite a bit more bearish than what one may have walked away by just looking at the last two equivalent indicators that we're talking about, the week, or actually the monthly stochastics and monthly RSI on the previous chart. Okay, so as with the previous chart, the MACD is negatively crossing, and here you can see, yes, the trend support break is quite evident. So then I guess the question then becomes, okay, well, so what does this mean for shorter term traders? Okay, so here's a 1-year daily chart, and on the 1-year daily, you can see a little more clearly rather that the violation that we were just referring to on the major uptrend support, you can see it occurred right here where I've added the blue arrow. Okay, so just roughly at the 9,000 level, this horizontal line, the support line, was sort of the first warning across the bow. That was where a lot of bows probably would have had stop loss triggered, and we had a cascading effect where the flurry of stop losses being triggered, and perhaps some short selling perhaps would have driven Bitcoin all the way down to, so on the index you can see that it finally found a support that has held up to now. From 5,000 we bounced all the way almost back up to 7. Okay, so then now looking at the RSI, stochastics, and MACD, and keeping in mind this is a screenshot taken from March 27th. Okay, so that was this past Friday. Okay, so you can see that that we had a pretty bullish indication from the way the sorry, this should actually be labeled daily, but basically the daily RSI, stochastics, and MACD basically all looked pretty bullish at around the time that the price began finding support at 5,000. Okay, so obviously there is a bit of a lag effect in a lot of technical indicators, especially these oscillators, and that's why it takes a little more nuance to kind of get ahead of these turns in the market. You can't just wait for instance, MACD positive crossover before taking on a bullish view. Sometimes people will look at just the histogram of the MACD, the blue histogram columns here, becoming less negative as the hint for going long. Okay, so these are some of the things that my newsletter illustrates with a little more nuance on a daily basis, Monday to Friday. Okay, so on this chart here, we're looking at basically the April contract on ICE US Bitcoin futures, and so basically this, again, the screenshot was taken as of Friday, and so we can see a little more clearly how the bounce occurred from this trend support line. Okay, so now the question then becomes, okay, we're coming right up against the 7,000 whole figure level, this horizontal line here, which previously was support, now resistance. Question is, do we break above that? Okay, so hints, of course, would come from how the stochastics and the MACD up here, but obviously, anybody looking to trade Bitcoin today should probably refresh that chart. Should probably zoom in on the 4-hour chart as well, just to get a little more resolution on what might happen today and tomorrow. Okay, so this is the 4-hour chart screenshot taken as of this past Friday. It is again just to illustrate sort of how I would, on my own trading, how I would drill down. Personally, I actually go even further on time frames down to the 5-minute chart before I pull the trigger. So generally, and again, this becomes more evident through my newsletter, but quite oftentimes I'll take a top-down approach where I will start with a very long-term chart for a market that I've never looked at, never traded. I'll probably look at I'll look at as much history as is available. So I might go to a site like Stock Charts, pull up a 20-year monthly chart time frame, and then from there I'll go to the 5-year weekly, the 1-year daily, and then to the 4-hour hourly, and then to the 5-minute. So that's kind of the thought process behind a lot of my analysis. And here's a screenshot just showing you how the ICE Singapore cash settle contract on the daily time frame, daily candlestick time frame appears. Okay, and then of course this would be the 4-hour time frame, also on the cash settled continuation contract. I just want to emphasize, so just keeping in mind both this chart here as well as this one here are of the continuation contracts. If you want to look at the actually this would actually be the April contract. Okay, so not the March, my apologies, this is actually the April contract. So the March one just expired just this past week, but you can easily pull this up, and this would be the 4-hour view. Okay, so just to recap, I mean, I did mention I have a newsletter on actually a variety of assets across futures, spot FX, and crypto. So crypto I write about once a week on Sundays. I don't have a life, so I do write it Sunday mornings. On Monday to Friday mornings, and going into the early part of most weekday afternoons, I publish a futures FX newsletter. So if you look at this screenshot of my website, which is tradablepatterns.com, you can see the headlines which reflect the market that anybody registering with a free account would be able to freely view. So for instance, for this particular screenshot, had you clicked on this Ethereum headline, you would have been prompted to register. And of course, there is a free membership for those of you who just want to. And once you've registered by clicking on this register link, it's very, very quick. You get an auto-generated email, you get a password in there, and then you can log in, click on the Ethereum headline, and of course it then pops up your free content. So the free content each Sunday on crypto specifically is on the top 3 coins which I've discussed today. So the Ethereum Headline, of course, just reflects what you can see for free, and premium members get the rest. And the same goes basically for any of the other headlines that you see. So once you're a free member, you can actually view free content every day as reflected by the market in the headline that you see on the front page here. My content's available through Bloomberg Terminal, where I have roughly, give or take, it really depends on the month. I have 200 to 400 hedge funds, banks, and corporates that download my content each month. And on Refinitiv, I have roughly 50 firms. I'm proud to say I do have 4 of the world's 10 largest hedge funds and the world's largest asset manager downloading my content every day through Refinitiv Icon. And I get quite a few sales traders actually coming in through FactSet. So that wraps up my portion of the presentation. Apologies for going over, guys. I thought that I needed just a little more time just to make things relevant. And for those of you who have questions or comments, feel free to reach out to me through any of that social media contact details that you see. And yeah, thank you again for your time, and thank you to Phillip Futures and I. I'll pass the baton back to Phillip Futures here.
All right, thank you so much, Darren. And now we have Ethan Lee, dealer for Phillip Futures, to walk us through the Phillip Nova platform. Ethan, over to you.
Hi everyone. Yeah, this is Ethan. I'm from Phillip Futures Client Relations team. So just in case you guys are looking to trade the Bitcoin futures and you guys do not see it in your trading platform, I'm just going to show you a very quick guide and a walkthrough on how to add this particular contract to your trading platform. So the first step is to actually log into your client portal, which is an online e-service portal where you can add exchanges and also do your withdrawals. So if you happen to forget your user ID, just click on the forget user ID. And if you forget your password, just click on forget password. So once you have successfully logged in, the first thing you need to do is to hover over e-services and then just go over to subscription for exchanges and click on new subscription. So the request that you should submit should be add exchange for this particular request. And for product, you should be looking at futures product. Platform will be Phillip Nova, and the exchange you should choose is ICE Singapore. So once this is approved, you can continue to log into your trading platform. So once you have successfully logged in, there's actually 2 links. One is for desktop and one is a mobile link as well. So if you have successfully logged in the watch list, if you do not happen to see this contract, just click on the add button. And for the product, you should be looking at futures. So the exchange you should choose is ICE Futures Singapore, and the contract code is BMC, or you can look for Bakkt Bitcoin Futures. So once you click on that, just click on the active contract month that you are looking to trade into. So once that is done, it will be included in your watch list in your trading platform, and you can start to see Bitcoin prices. So how to trade this particular contract would be just to click on the contract itself, and then click on place order, and the trade ticket will be shown there. So just according to your order types, you can key in your particular price that you want to enter at, and then just select buy or sell. So once again, if you have any general inquiries that you would like to ask us, or if you have any questions for tonight's webinar, please feel free to send us an email. Anything related to brokerage or trading platform, you can contact us as well, Client Relations team. Our contact and email is there. So that's all the time we have tonight. Thank you everyone for attending this webinar, and have a great evening. Thanks.